hand you straight over to Mr. Tom Williams. Tom.
Thank you, Peter. Thank you, Rita. Tom Williams here, speaking to you from Worthing, a nice little resort town, the south coast of England. It's very close. It's practically on, well, it's on the beach, the seaside, and the weather is slowly getting better. Thank goodness for that. Anyway, we have the Dow Jones 30 Industrial up on the screen. I assume we can all see it. The cursor is resting on a bar with a red arrow on it. And the signal tells us supply is coming into the market. And that is true, and that's why it's been knocked sideways for at least 3 days, look. Although apparently it's going up today. This here on this signal is an historic new high for certainly the S&P 500. And the reason why a signal has appeared on this bar here, warning you, markets don't like ultra high volume. Here it is on up bars. And that's why it's gone sideways for 3 days. Look, 3 days. Okay, now there's a couple of principles here in this chart, which I think if you burn it into your memory, you'll be able to make some money on this easily. Whenever you see a red arrow like this, look up here, it tells us there's no demand. Read the dialog boxes. We don't hold any secrets back. Everything we know is either in these dialog boxes, right, or we tell you in these seminars. No demand. Now, if you ever see a red arrow appear, an up move, and the very next bar, look, there it is tested. It's a sure sign that market wants to go up, or is going up. Not wants to, it is going up. In other words, when you see a red arrow appear, you see a down bar. I've got mine in red. Apparently you get your own colors, but I've got blue for up and red for down. There's a red down bar, look, narrow spread, close in the middle. Right, now I know we've got that because the actual computer, if you look down the bottom here, if I can find it, there it is. Spread narrow, close middle, right? And the volume's low. That is a classic test. And that's whenever you see a test in a rising market after a red arrow, that's a sure sign it's going to go higher where you can make some money. You check it for yourself, not only just on the Dow, but many, many other stocks have it, all sorts of vehicles have it. And even if you go lower, look, lo and behold, another one, look. There's a red arrow, no demand again, look. And the very next bar, look, is tested. There's no signal on it, but you should recognize that immediately as a test. It may be slightly wider. I think it's down the narrow spread. It's certainly closed near the high, look. That is a test, and that's why that market went up. Okay? So you should remember that. If you could seal that in your mind, you're going to make some very easy money when you see that. There are a few certain things in the market, and that's one of them. Now, of course, if you've got serious weakness in the background, then you don't expect these tests to work so well. I mean, that there is weakness. And that's why it went sideways for 3 days, though it's going up today, admittedly. Okay? Now, are there any questions about that? Please. Rita's looking at her screen where you can see the questions coming in. Right, it's a question.
Tom, what if after that test we see up bars on decreasing volume?
What was that?
If after the test we see up bars on decreasing volume.
Decreasing?
Yes.
Well, you tend to ignore that because it normally won't be no demand. It's a test, you see. That's professional money looking at that. Excuse me. They're all concentrated on this market. And when they do a test, there's no supply. That's it. It's going to go up. So I tend to put more emphasis, or all the emphasis, on the fact this is a test. And it's not a fail test. You see, you'll get a fail test when you've got weakness. Like that signal we see right at the top of this market, that's a sign of weakness. Now, if that appears and you see a test, then the test is likely to fail.
Okay, anybody at this stage got any questions about perhaps principles, or maybe there's a stock that Tom could look at, or another instrument? Tom wants to look at the 20-minute ES.
Live market.
S&P Future, 20 minutes. Here we go.
Well, I'm looking at the 20-minute for no particular reason. All these time frames tell you a story. Very, very similar. Now, what's interesting with this chart is that, look, we can all see it's shot up. We made a historical new high here, apparently. Right? Now, why is that? Well, you could see it coming, look. Look at this shakeouts here. There's one there, look. There's another one here, look. These are shakeouts, and they only do that if they see the market is potentially strong. And then once you see that, once you see these movements as the market moves sideways, you can actually analyze individual bars fairly well. And you'll see that, right, it's a red down bar. There's no selling pressure. Right? Up bar, there's no demand. Red bars, no selling pressure. Up bar, no demand. No selling pressure. No demand. And so it goes on. They know that there's some news of something coming out at the opening. And the thing is, all this is caused by these shakeouts back here. They've shaken the market out. They've primed the market, shall we say, primed it. They know it's going up. And they're just waiting for golden opportunity, probably some news or something here. Okay. So we got high volume on up bars. Right, so that stalled the market a little bit. Down bar, no selling pressure, look, up. So it's trying at the moment to still go up. There's even a green arrow, which looks like a test of some sort. Question?
The first question is, Tom, is it often that the next bar after the test is marked down and closes higher? Is that often?
Well, you may see that occasionally, perhaps. But it's just another opportunity they've got to make sure they've grabbed as many stops below the market as possible. But do not expect that to happen after a test. Expect the price to go up. So occasionally you might see that, but very rarely. But if you see a test, as your skill as a trader and analyst, expect that market to go up after you've seen a test like that, especially after one with a red arrow in an up move like that.
Okay, Bruce is saying on this, the Dow Jones daily chart, after the upthrust 7 days ago, the next bar initially traded down. This must be a bear trap, he questions. He said it initially traded down. Is that a bear trap?
Well, see, they whipsaw the market as best they can under the circumstances that occur at the moment. But they're there. What they're doing, they're holding the market up. In other words, they're not actually participating in the down move. They're supporting the market, waiting to every wave up. They probably want to sell more to whoever wants to come in and buy it. To do that, they have to support the market. Now, you'll see the market may be a little bit whipsaw, but you can tell if these bars are what we call strong bars or weak bars. A strong bar is a down bar with volume less than the previous two, hopefully on a narrow spread, hopefully closing in the middle or high. That's a strong bar. And once you see that going on, then you know they're at least testing the market and holding it up. But it's interesting we're into historically new highs here where that red arrow is. Now, will this bring on what we call a buying climax, which will definitely mark the top of the market? It's a phenomena that's known. It's been going on for hundreds of years, that the public or the fund manager, whoever, banks, whoever, or the public, they tend to rush in and buy on the highs. It's just the way the herd behaves. And as soon as you see that, the professionals unload all their holdings into that sudden surge of buying, and that will mark a buying climax. We haven't actually seen that yet. Yeah, we've seen a bit of supply coming in where that arrow is, but we haven't really seen a substantial amount of selling yet. But hopefully when it does happen, or we get the end of a rising market signal where it's gapped up, narrow spread, massive volume, that's definitely the top. Although you'll never believe it, listen to the news. Because I've heard I was watching this market top once before, and I had one of these TV shows on, money shows. They said, well, it's got to be buying. It can't go up unless they're buying. So everybody's buying, look, so it's bullish. But they're wrong. The public, or the herd as we call it, may be coming in. Well, they would be buying. But the serious professional money are unloading and also probably going short at the same time. They know the market will be weak with that. Anything else, Rita?
AAL, Peter. Okay, we've got a request to look at chart of AAL. Yeah, I should think so.
AAL. Well, it's certainly acting stronger than as strong as the index, look, which is lovely. It's making a new high here, where the index is certainly making a new high, and I can't see any real high volume anywhere to say it's hit supply. There is a red arrow. There's probably a bit of no demand. Look, yeah. Now, we saw that At the same time, we saw that sign of weakness appear in the Dow daily chart. But this stock looks strong to me. What's going to make this stock weak is when you see high volume on up bar. That'll make the stock weak. At the moment, it looks very buoyant and looks as if it wants to go up higher.
Okay, John asks, why is the opening price not shown on VSA bars?
Well, what I say to that is, it's almost a joke for me. What on earth do you want to see the opening bar for? Nothing's happened. Imagine you're a detective following somebody. To see him put his legs over the edge of the bed first thing in the morning is probably not on your priority as a detective, because he hasn't done anything. Nothing's happened. The only reason why people look at the open is when they follow mathematical formulas which require the open. And we don't need or follow mathematical formulas. And the reason we don't is a very logical reason, that if there was a formula out there that you could rely on that actually worked, then there's a lot of very, very clever people out there, and they will jump onto that fairly quickly or very quickly. And as soon as it started to appear, they'd be trading the hell out of it. And it wouldn't exist because of the trading that would be a hit. Now, the only fact is, it may be there in hindsight, is the fact is that nobody traded it enough to dilute their things. And that's why mathematical formulas don't work reliably enough. You may look back in hindsight and say, cool, look at that. But the reason they look good, some of them, is because they weren't traded. If it was a guaranteed setup for you, don't worry. Very, very clever people out there, back with money. They would have spotted that years ago, and they would trade the life out of it before you ever saw it. And that's why I don't believe in formula. That's why we don't have to believe in mathematical formulas, and that's why we don't bother to look at the open. Nothing's happened.
Okay, so Louis asked, hang on, back to that chart. 3rd of February, high volume, sign of weakness failed, then a test on the 5th of February, and up we go. Is that correct? So there, Peter, can you show Tom, point to him, the 3rd of Feb, he says, high volume, sign of weakness failed, then a test on the 5th, and up we go. Yes. And then Bruce is asking, is bar 6, is that 6 back, or is bar 6 an absorption bar? Well, 6 must... Yeah. Yes. So Tom says yes. Do you want to say anything on that, Tom? Or no. Yeah. So, and then it's tested a few bars. It's tested a few. Oh, okay. So you mean 6 back from the end. So Tom, he means. Yeah, that one. Is that absorption?
Yeah, that is.
Yes. Correct, he says. Okay. So if we go to the pound 1 hour chart, for Louis.
Was that the pound?
That's the pound, yeah, 1 hour chart. Do you want more bars first?
Well, that's a pound. It's certainly whipsaw-y, isn't it? You're going to have a job to live through that. Look at that up thrust there. That's an up thrust there, a serious sign of weakness, look. So it falls, but we do have these down bars are on low volume, look. That allows it to go up for a bar, but it's been whipsawed in the market. But look at the high volume. Stocks or money or whatever it is, they don't like ultra high volume, which that is, on up bars. And that's why it's fallen off here. When you see these things whipsawing like that, it's best to leave them alone. You don't trade unless you see something that you understand, can read, and you know you can cope with. You don't dive into the pool where there's a load of alligators there or something. You just, this 2-minute mine, that's whipsawing sideways. That, to me, looks weak.
Okay, can you have a look at the 1 hour, yes, euro, or a lower time frame? There has been very high volume on an up bar. Was it absorption? Is there no selling pressure, is the question.
Well, I can't, no, it doesn't look like absorption volume. That looks like supply hitting the market. What's the indicator say?
Supply coming in.
Yeah, supply coming in. See, these rule sets were designed and made specifically to look out for things that we know. We don't hold any secrets back. We tell you why the market behaves such a way, of why that's weak. And when you see those sort of bars, admittedly, it's shot up. There may be some absorption volume there. I'm not sure what's over here, look. If you could put a few more bars up, perhaps. Not so many as that. Because I can't see it too many. Where's the old high? Back here? Yeah, no, that's not absorption volume. That's weakness. That supply hit that. And that's why it's gone sideways for 1, 2, 3, 4, 5, at least 5 bars, look. That's not absorption volume. If the old high, or there was an old high somewhere here, say yes, it is, look, but it isn't, look. It's a job to see, because the computer re-screens the chart to fit the screen. So sometimes that can mislead you a little bit. You have to watch out for that. That to me looks like weakness. It doesn't mean to say they're not going to have an up thrust or something to fool you, catch you, which they enjoy doing. They will do if they can get away with it. Any other questions?
Talking about absorption, absorption and accumulation are often difficult for me to fully recognize. Could you talk about it?
Well, when we talk about absorption volume, you see, imagine you are a professional trader and you know or feel that you could push this vehicle that you're interested in, or you put a lot of money in, to go up. That's why you're in there. However, you notice or know that further back there's an old high. It may not be, you know, a bit of the chart that's gone up and moved sideways. Now, you know, as a professional, there will be a high percentage of people locked in there. Locked in because they bought there, right? They saw it fall, right? Now, the best way to see, imagine you are one of those losers or weak holders. You think, oh my God, I don't like this. Now, if it goes back up anywhere near there, I'm out of this. Now, this is a natural way the herd and non-professional think. professional money know this. So they say, right, if we can gut it up through that old high to the left and absorb any selling quickly on the way up, that's what we call absorption volume. It's very, very clear. It's not accumulation. Accumulation happens at the end of a bear market, when the market's been falling. You've got thousands of what we call weak holders. They're very worried about the persistent down moves day after day, week after week. In the end, the way the herd works, they all seem to get fed up with the lower prices and say, to hell with this, I'm out of here. And they sell. And that's where the professional money come in and buy off them. And that's what we call accumulation.
How far back for an old high?
Not too far. Sometimes it's, well, we can't give numbers and figures because we don't use those sort of things. We don't use formulas. But we know any high, especially one fairly recently, it might be 10, 20, 30 bars. There will be naturally traders trapped in that high that gone long or were long, and then they saw a decline. And what they really want to do is get out without losing any money. That's what we call the old high.
Okay, Steve says, Tom tends to look at daily charts. I get stopped out on trading intraday because of whipsaws. If Tom trades intraday, what time frame is best to look at to avoid whipsawing?
Well, you're going to get whipsawed any time frame. To be quite honest, when I'm trading these small time frames, I'm what they call scalping. I don't use stops. I'm staring at the screen waiting. And the first time I see any weakness, now Gavin's very clever at this too. As soon as he sees it's wrong, he's out. And that's how you trade those. Because if you see the setups, follow the rules, right, you're going to be right more often than you're wrong. But if you are wrong, you have to close out a trade quickly. There's no good praying or hoping or anything at all. Just get out. But you're going to get caught, and that they know that. They don't forget professionals. They've got screens. They know where all the stops are. They can see them. They're marked on their screens, and that's why we recommend, if you insist on using a stop, use it on an odd number, because you'll find that most people think in even numbers, and the professionals know that. They gun for even numbers. If you put it on an odd number, at least you stand a chance of not being caught.
I'm not sure what this is, Peter, but ZS, Soybeans, Graphica Diary. Carlos, soybean. Yeah, can we put soybeans up, Pete? Put the continuous. We've got the continuous contract for soybeans.
You have to be very careful with commodities. They're very, very dangerous. They have this gapping up, gapping down, and God knows what. But this certainly looks weak, doesn't it? This chart here, that's an upthrust in anybody's language, I would have thought. That's definitely a sign of weakness. However, you can't trust them. The computer tells us an upthrust. It's certainly a sign of weakness. But see, soybeans, it's unusual if we don't have a signal somewhere on the lows here. Well, there is something there, look. Yeah. You notice that in these commodities, yeah, where most of the traders are professional, that's why you get this orderly looking charts. It climbs up properly. That looks like, well, that's a little bit of supply. See, the volume's increased. There was somebody sold there and they tested it, look. Because there are different groups within these, but that certainly looks like a sign of weakness. You certainly wouldn't be encouraged to go long or stay long when you've got that in the background. That is a serious sign of weakness.
A couple of questions. What should we expect after this upthrust to make sure the market will go down? And Carlos says, so would you go short, Tom, or what would you wait for to short? Okay.
Well, you've got to assume that when the professional money see that, right, some professionals have sold there, and when other groups see that, they will want to start distributing their holdings. So that means that the market has to be supported, and it will probably move sideways as they're supporting and selling on every wave up. And then you're exposed to what we call an upthrust or something near the end, or no demand up move, or a top reversal, or some one of these signs, serious signs of weakness. This is only the initial one. You have to assume this is what's going to happen. But you certainly don't go short immediately on that.
Right, so GR is saying, I do not react on the first sign of weakness upthrust on an uptrend, rather wait for confirmation. And he says, similar to my comment, Gavin seems to wait more for confirmation. I go to the shorter time frame to move quickly. Yeah, well, I do that as well. That's right. Right. Pete, APA, I don't think we won't have the 1 hour chart. If that's a stock, Tom won't have that data. So if you, yeah, Apache Oil, we won't have a 1 hour. Would we have the daily, Peter, or APA? Do you want, what are you going to try? We're going to give it a go. Oh, no, he wanted the 1 hour. What I'm saying is we don't have that, do we? But we have the daily. We'll look at that. But Gavin would have the data for that. Tom, is Gavin doing his seminar tonight? Yeah, so he's 7 p.m. UK time. Gavin will be doing his, so you could ask him then. Tom, Apache Oil.
Right, we'll try and remember and ask Gavin to talk about Apache Oil. This is Apache Oil. Is it daily chart?
Yes.
Well, it doesn't look strong, really, does it? I mean, admittedly, you've got a down move here. You've got signs of strength here, look. Test, that's why it's gone up, look. You've got a shakeout here, look. There's no signal on it, but that's a shakeout, look. They rammed it down on some sort of news or any excuse. Kept stops, mislead as many people as possible. But the volume is fairly high on that, look. In other words, when they rammed it down there is still some supply present. What we want to see is on those down moves, we want to see volume clearly lower than here. And it's not, it's actually higher, look. So supply is in there. Although it went up, that's why it didn't go up very far. and this looks like no demand up here. It's fallen again here, look, and the volume is again high. Although we got a green signal appear here, it says potential stopping volume. Well, to me that looks like supply. It's probably going to continue whipsawing, but there's nothing clear there to me that would excite me to say, right, I'm going in buying that.
We were on the euro before, and there was a comment about that chart. There is an old top or resistance at that level in October or December. That's why I thought it may be absorption. But is that, I mean, if it's, yeah, is that too far, Tom? It's too far, says Tom. Too far back. Do you want to speak? No. He said they would have sorted that out. Yeah? By the time they'd reached there now, today. The pound 20 minutes. B, British pound 20 minutes. Oh, we need to put one up. Yeah. Keyboard's not working.
Well, this is the pound 20 minutes, and we can see markets don't like ultra high volume and up bars. And there they are, there's two of them, look. And it's those two bars that made this fall down here, look. So they marked it down. There's a little bit of volume there still. There's no demand on these up bars, look. Not a lot of selling pressure at the moment. So this could be pushed up again. But it's highly unlikely to make any new highs through all this lot. You'd be pushing your luck if you went low on this, I would have thought, at the moment. Okay? Now, any more questions? We're happy to answer them. Any principles? Keeps the pot burning, boiling, I should say, burning. What's that, the S&P? Right, so we're still going sideways. And we're going sideways because markets don't like this ultra high volume here on these up bars. Although it's been marked up, look, quite well, thank you very much. We're in historical new high here, apparently. Here. There is not a lot of buying going on, look. It's almost no demand there. Looks like a test of some sort here. Now the thing is, if you see a test like that in a rising market, you would expect immediate higher prices if you saw a test. And we don't see immediate higher prices, look. So that's telling you a story. The market's opened itself up, say, look, okay, you can go up, but it refuses to. That means the market must be weak. Because believe me, if it was strong, they would have grabbed that opportunity and it would be gone up. So that's what we call really a failed test. And of course the failed test, the reason you got a failed test is you've got this supply in the background, look. Markets don't like high volume and up bars. Okay. Any more?
Pete says, why can't we put up an hourly chart on a stock? It's not to do with the software we have. That's to do with the data feed that Tom gets. He doesn't get that particular type of data feed. So, but Gavin will have it. He has. Yeah, we'll speak to Gavin later. USO, Peter Daly. I think we've looked at it before, haven't we? It's an ETF of oil. Is that right? For Sergio.
It's a derivative of oil.
Right, it's a derivative of oil. Well, it's certainly going up, look. That looks like a test right there. Now, if this was strong, you'd expect this to go up fairly quickly now. Although you do have, well, there's an upthrust there, but you don't have any serious high volume and up bars. And you certainly seem to have some stopping volume here. On the low looks. Red down bar, very high volume. Now, there's a red arrow there, look. And the next bar, I can't quite see it, but it looks like a test to me. That principle we were talking about. Is it?
It's a down bar closing near the middle.
Yeah.
The volume has actually increased.
Yeah, but is it, right, narrow spread?
Especially.
Well, it is an attempt, look, to test the market. It's not very particularly very good one. But there's another test there, look. They marked it down. But this certainly looks interesting instrument to follow. It's definitely trending up, look. It's acting as strong as the index, which is a plus sign. That could easily go up.
Tom, for stocks, what time frames do you use for your setup and your trigger for entry? On stocks.
Well, we use daily charts. They're, of course, far more reliable. Now, there is one important thing that we haven't shown you really, which we're going to try to implement, is that when you make a stock selection, you pick it from the sectors that are acting stronger than the index. Like, I don't know whether you know about sectors. I used to have them. I don't know what happened to them, but you get oil sectors, you get natural gas sectors, you get banking sectors, and all this type of thing. And what you'll find, because the markets are so big, that they can't move all the markets all at the same time. Even they haven't got enough money to do that. But you watch a sector that's clearly acting stronger than the index, or as strong, then you pick your stock from that sector, and that gives you added bonus. Now, I don't know why I don't have them. I used to have them, but they kind of, because we seem to be concentrating more on scalping the futures market, it's kind of tends to drop by the wayside. But we will have that, but it's important if you can get the sectors. And then from the strongest sectors, you pick your stock, which is also acting stronger or as strong as the index. And you find you won't go far wrong if you do that. And the daily charts I always tend to use for that.
Okay, Michael's asking, can you immediately tell anything from the recent monthly ES about the market continuing to rise? Oh, right. He says the monthly ES, but I mean, we'll put that up then. Can you immediately tell anything from this about the market continuing to rise?
Can you put less bars up? I have to have less bars. I can't see them properly. Well, you can see, first of all, you can see how the trending system works. All the time the bars are blue. It shows the market's been supported. Allow for one down bar. Ignore level bars. Now that down bar, is that narrow spread, close in the middle? Oh, I see it, but right, okay, well, forget about that now. But there's loads of buy signals here, look. And the trending system, it tells you it's going up, look. Allow for one down bar. That'd be a red down bar, look. Up, down, up. So it's actually still trending up, look. Allow for one down bar. Up. It's still actually trending up, look. And the only thing that's going to stop that, as we know, is very high volume on these up bars. And that looks like no demand. But despite that, it's still going up. There's nothing obvious that I could point out to you except that trending system. If you're a fund manager and you're looking at things over a year or several years, obviously you use these longer term charts. And then you ignore the whipsawing that goes on during the weeks. It's, as you can see, it's quite reliable because that's how the markets work. If they're in an up move, they have to support the market. So the close is always higher than the close of the previous bar. Like now, it's still going up, look.
Eleni is saying, Peter, if you want to show Tom, monthly charts may indicate 2553 target. So, yeah, okay, thank you. Question here is, Tom, is there significance when you see two or more tests in a... Okay. Is there significance when you see two or more tests in a row before a bullish move occurs? Or is it just that professionals are trading from a higher time frame, so their one test is shown as more than one test on your shorter time frame?
Well, whichever way you look at it, it's still a test. And the test means that professional money seriously want to know whether they can go higher or not. That's all I can say to that. A test is a test. You should expect higher prices more or less fairly quickly, immediately after a test. Otherwise, it becomes what we call a failed test. And of course, it will be a failed test if there's weakness in the background. If you can look back and you see a very high volume on, say, an up bar, say 3 or 4 or 5 bars back, then that test is probably going to fail. professionals are fully aware of the state of the market. But testing, especially after a red arrow, as I showed you in the Dow earlier on, I noticed that's in many of the stocks and many of the instruments. It's a very reliable way to make some quick money if you're scalping.
Another question before we're going to put corn up for Eleni, but on that subject, Tom, about tests, Edmund says, if you see a second test bar after the first test bar, does it invalidate the first test bar?
Well, all I can say to you is if the second bar is down on a narrow spread, closed in the middle, and the volume low, it definitely confirms the first test. It's just they had another opportunity to mark it down, probably trying to catch a few more stops and mislead a few more people. Remember, they're a devious lot, and they're not there for your benefit. They're there for their benefit, certainly not yours.
Okay, so this is corn. Eleni is short.
Right. Short on corn. Yes, it looks a bit dodgy, doesn't it? Yeah, it's good. So one of our clients is up on short on this bar here. Well, it certainly looks weak, doesn't it? Normally a widespread down, as it rushes towards a former area of support, which that top trend line would be, is normally indication of lower prices. But they're very devious. They may have a no demand up move or something. But that, at the moment, congratulations, looks like a good short.
Do you want to put up something like the 5-minute or 10-minute of the ES, because we'll finish, no more question. Okay, we're just going to finish soon. This is the 10-minute of the ES. We'll have a look at.
Right. Okay, so we can see where it went up. It hit the high volume, look. This is a 10-minute chart of the S&P. That knocked it sideways. However, they're holding the market up by the look of it. That is a test, look. It's been covered in black because it's closed where it opened. And it went down and closed up near the high or on the open. Right, so they're not selling at the moment. There's an up thrust, so they're not buying at the moment. Down bar, down, little or no selling pressure there, look. Black bar, that means nothing much is happening. Up. It looks to me more stronger than being weaker at the moment. But there's nothing there, clear evidence, unless you got it on those lows, that this is going to go up, guaranteed to go up. Don't forget, they're very devious, they're very cunning, they'll whipsaw the market on news. The whole idea is to wrong foot as many traders as possible, catch as many stops as possible, everything they can do to benefit their account, not yours. Now, Gavin will be doing his seminar at 7. Do you have Apache stock, Gavin?
What, sorry?
Apache.
No, but I've actually, someone emailed me about that the other day.
Yeah, Gavin says he hasn't got Apache.
Oh, I have.
Oh,
I
yeah.
wanted to look at it.
Yeah. Not now, but when you do your seminar.
Look at it at 7 o'clock.
Gavin says he'll look at Apache at 7 o'clock.
That's my time.
My time. No more questions? Okay, well, I'll say thank you very much for listening. And I'll be doing a newsletter Saturday or Sunday. And that'll be out for you to look at. And I'll hand you back to Peter to say goodbye.
Okay, folks, thanks very much for coming along this week. I hope you enjoyed everything. We've got a newsletter coming along on what day? On Sunday. And that's always worth looking at. And later, Gavin Holmes will be on in half an hour with his... Okay, so particularly about stocks and the indices, we've got Philip Friston coming in as well as Gavin, so that will be in half an hour's time. So tune in for that, and we'll see you all next week. So with that, we'll say thanks and goodbye.